Hey guys, welcome back to the channel. What are the COT reports saying lately? If you don't know what the COT reports are, they are a very interesting tool for us Forex traders, and I think it's not necessarily required to make money with, but it definitely is something that I include in my analysis. So today we're going to be going through the COT reports. I'm going to show you where you can get them, how I personally view them, and we're going to take a look at some current examples as to what's going on with the different major currencies. So stay tuned and let's go ahead and get into it. What's up, everybody? Welcome back to the channel. If you don't know me, my name is Nick. I talk trading, investing, and I try and keep it real here on the internet. You guys already know there's a lot of noise, a lot of hype around financial markets. I think it's important to understand that nothing is perfect. There is no magical strategy or approach. And so when we look at the COT reports, a lot of times there's a lot of hype around the COT reports as well. But in this video, I'm going to give you guys the practical rundown as to how I look at COT reports, as well as do some right now current examples with what the COT reports may be telling us or potentially hinting at for the maybe weeks or months to come in some of the major currencies. Now, the COT report is basically a report that is required for large investors to submit their positional holdings across the board. Now, this is including the futures market, and this is all sorts of different positions being held by large institutions, by non-commercials, commercials, all different types of larger money. And it can give us an idea of what the larger players in the Forex or actually futures market are doing, because this is based on the futures, but currencies can be traded on futures. A little bit confusing for the new traders, but just know that this is giving us a general idea of the overall currency market here for the last several weeks. So what this tells us here is there's a lot of lines on the chart. So let's sort of just jump right into this. So what you can see here is that the red line is just the close, right? If we wanted to just isolate, we could just look at the dark red and the dark black lines. These are really the two that I focus on. The dark red here is the actual price of the currency that we are looking at, or the value of the currency and whether it is increasing or decreasing. So currently you can actually see down here, we've got the euro. And by the way, I will tell you guys how to get to this. You can actually see it up here at the top on the screen. So you can go find this on my website, a1trading.com. We've got a lot of different tools for free available for people who want to just get access to them. There's no price to it. You can just go check it out completely for free. I do ask, if you want access to the COT reports and you want access to all this stuff, support us by just checking out some of the other stuff that we have available for free on the channel. You can, or on the website. You can go to the trade ideas section, come down to COT reports, and this is where I'm at. So I click this and I am here in the COT reports. Okay, now that we've got that out of the way, back to the focus here. So the red line is the actual asset valuation going up or down. And the black line is actually going to be the positions, the net non-commercial positions. You can see down here in our key or ledger. Down here, the key has net non-commercial positions, and again, our weekly close price. So this is on the weekly time frame. So this is higher time frame stuff. You guys may have heard this before, but a lot of times smart money, the big banks, they don't operate like a lot of short-term people do, like day traders and scalpers and that sort of thing. They're not usually interested in that because they have so much money that they want to move around in this market, that short-term day trading is really tough for them, because again, they need to fill a big size position, which causes them to not be able to do it as fast as, say, the average retail trader or even small hedge funds per se. So with that said, that's what our two lines. Now the net non-commercials, these guys are basically, let's see, does it give us any description here? This is actually a tool imported from another site that kind of made a widget. I don't think it does give you information on that. But the net non-commercials are basically big money that is, deciding the price direction here, or you can see their positions as to what they are currently doing in this market. So you can see as this line is increasing, the black line here, that's telling us that net non-commercial positions have been increasing week over week in the big term, in the big picture here, right? So that is interesting because that tells us what the big money has been up to. Now, it doesn't tell us what they're going to do next, which is, again, one of the biggest criticisms for the COT report. But the idea here is a lot of times these long-term, big-time players, they are riding trends or even creating trends. And so when we see that going on, that may actually be something of interest to us. Now, there's a couple key interesting points here because number one, again, we've got when things are going in a direction, we can say, hey, well, the big money is moving north on this euro currency, which recently would have been a great bet to ride that trend because the euro has been moving up and up. You can see here's that red line, the asset. So you can actually see the weekly close price. So on the euro, we've been increasing as the smart money basically got long. So interesting, check this out. So we started to increase on the black line, right? The net positions started shifting to the long side. And then there was a little bit of delay and price starts to rise. So it was almost like the smart money got involved a little bit before the price started actually going up. And so there's these little patterns that people can look. Now, I don't see any sort of magical always indication like, oh, if it moves up, that means that it's going to move up on the price, right? Because they're not always correct. There are times where this is wrong. For example, here we can see that the net non-commercial positions are actually moving lower and then the price spikes the other way. So it's not like it's 100% accurate, but I do think that there is some value in some of the longer term plays, some of the longer term trends. So when we look big picture at this concept here, you can actually see if we were to draw a trend line, which I can't draw here, but let's just say, right, that's a very ugly trend line. You can actually see that there is an upward trend overall here on the euro. Now, when things start to flip, that's when things can kind of get nasty. So again, we were kind of in this downward momentum here, and then things started to shift. And then ultimately the price followed a few weeks later. So something to think about there is when we're looking at the COT reports is noticing a shift in the direction may actually be an indication. So let's actually look at this in current time. So we've looked at historically just as some examples. We're all the way over to the right here. You can actually see this is the most recent data there. It's kind of cut off, but it's the 7th of September is the last time we got data on this, okay? And that's telling us that the price of the euro, obviously, we already know that it has come down in the last bit of time here. But on top of that, you can actually see that net commercial positions have kind of moved flat. So there hasn't really been much of a change in the net non-commercial positions in that last, that 2-week span. So, you know, you can look at it smaller or you can look at it bigger, and that's where people debate. But for me, I like to look at the longer term. So when we don't see a rise in this thing, to me, that is a red flag. And the reason that's a red flag is because when things are just kind of flat, usually that doesn't mean that there's strong buyer demand or sell demand. And a lot of times that could be before a flip. Now, not always. You can see here, for example, we kind of moved up, kind of moved down, and then we ultimately led up. So it's not like it's a perfect indicator. But again, it's more just like understanding where the wind is for your sale. If you know that positions overall right now on the euro have been increasing, it might be a better idea when you're using your technicals to go look more for long positions. So it can help you develop a bias based on what smart money is up to. So if the euro is being bought, maybe we're looking for buy trades. Let's move on to another example. Maybe we can find something that's a little bit more, I don't know, easier to look at. So let's refresh the page. And if I switch over to GBP, is that going to do it? There we go. Okay, so now we're looking at the GBP, and this is interesting too. So let's dive into this. So the pound has been increasing. You can see the red line there indicating that GBP has been moving up, and we already know that just from a standard price action chart anyways. But what we don't have on a standard price action chart usually is this net commercials or net non-commercial positions. Now, interesting with the pound is we've seen an increase in the price, and let's actually look at this because this is interesting. So if we draw, this is a rough guess, average, line of best fit, and then we look at this, you can see that we have been increasing our net non-commercial positions pretty steadily on this pound movement. However, check this out. I find this very interesting. So the pound is moving up very rapidly, but the net non-commercial positions doesn't seem to be moving as up as fast. So that could be an indication, perhaps, that maybe it's still worth being long, but maybe we are a little bit overvalued, question mark. overvalued. I don't know. I'm not saying that this is like the exact, oh, it's got to be overvalued, it's got to come down right away. But what I'm saying is that, okay, well, if you have the wind behind your sails, right? We're clearly going up right now. And we combine that with maybe our other standard analysis, that could give us some possibly better trades. Is it better to trade with the big money or with the dumb money? I would say probably the big money, right? Because they're more, involved in this market than the average retail trader. They know more. They have studied more. They've got the best engineers, the best computer science majors, the best everything in their hedge fund, in their money management group, whatever, trying to develop the best systems. So to try and go against them, to me, is probably a worse idea than trying to find ways to collaborate with them and just join the banks and the hedge funds and the big groups, rather than just trying to fight them all the time. So let's move on to another example just while we're doing this. Let's look at the yen. So the yen, there's not been too much here. You can actually see these two have pretty much just agreed. We've seen this down, down, down on both the red line here, which is the asset, and then the black line has kind of gone slightly down as well. So not really a great example here. We looked at the yen. Swiss is probably going to look the same, but let's do Aussie. There we go. So we've got the Australian dollar here. Ooh, similar story to the pound just off the rip. So you can see back in March, we've been driving up very strongly on the Australian dollar price. However, what does the net non-commercial position say in response to this drive up? Well, it says, yeah, positive trend, but not as much as it's shown here. So this is interesting because that's showing a potential divergence here in the strength of this trend. So the price is showing a lot of dominance, but the actual net non-commercial positions are increasing, but not as fast. So what that could tell us again is maybe it is a good idea to be long, but maybe waiting for some sort of pullback here in the price could be a better indication to look for long entries. So that's just what I'm seeing here and how I personally look at the COT reports. Again, it is not like a absolute everything for me for my analysis, but it is a component that I keep an eye on. I like to look at the dominant overall longer term trends. Because I'm a swing trader, my trades take usually a day to a month to 2 months, maybe at the longest usually. So this is something that is of interest to me. It fits within my time frame. But if you're a day trader, I don't think that this sort of COT report is really going to do too much for you, because it is a little bit longer term, and momentum in the short term can be all over the place. But the idea here is that these longer term trends can be studied and maybe potentially even added to your trading approach. So COT report on NZD is interesting too, because we've got very strong asset price increase, and then the COT report says that the net non-commercial positions is also increasing, but similar to Aussie dollar, which these two currencies, I'm not surprised by this because they oftentimes move similarly, not increasing as much as the asset price. So what that could mean, again, looking for, hey, maybe if we see a pullback to a significant level, maybe if we see some signs of strength after coming down from the highs a little bit, maybe some indication that, hey, might be worth considering. So this is how I look at the COT reports and some things, kind of just evaluating the current environment that we are in. If this was helpful to you, do me a favor. You can go find this information all on the website, but just support our work on the site. We've got different people sharing stuff. If you make it to the end, hey, we've got something secret for you. Check this out. If you actually just click trade ideas up here, and you go to the free market newsletter, we've got a team of people who are sharing content all the time about the market, taking a look at different things that are going on and sharing insight that very well may be helpful to you completely for free. So come over here and subscribe to that, and also subscribe to the YouTube channel if this has been helpful to you, or leave a like if you made it to the end of the video. I seriously appreciate you. You guys have no idea how much work and how much reward there is on this channel. So when we put all this time into creating content and sharing stuff for free for traders, it is something that we are passionate about, and we love to hear the positive feedback and the way that maybe traders have been helped by our content. So if you have been helped, make sure to leave a like, subscribe, and we will see you back in the next video.